So I get asked this question a lot. Nick, should I be investing now in the stock market, or should I just wait for a stock market crash to then buy in? Or another way to say it really is now the best time to invest in the stock market? You know, sometimes I get asked, is now the best time to buy a specific stock like Tesla, for example? And guys, the answer is actually very simple. The problem is the media portrays things a certain way, and even if you read the comments section here on my videos or other YouTubers' videos, you'll get a lot of trolls that kind of try to sway you a certain direction, where they say things like, oh, the best time to buy Tesla, for example, was back when it was $500 per share. Now it's just too late, you missed the boat, too bad. And if you have a short-term mindset, I guess that's true. You kind of missed the boat on those big gains. However, if you're looking at businesses many years out, say 3, 5, 10 years out, you gotta ask yourself a simple question. Is this a good company, and will this company be larger in the future than it is today? If the answer is yes to that, then more often than not, the stock price will also reflect that over the long term and will increase regardless of if the stock price has already gone up massively in the future. If the valuation can be justified, that is the bottom line, then the stock price will most likely be higher in the future. It's pretty silly if you ask me, because great stocks and great businesses will just keep getting more expensive. So if you're looking at a business like Amazon and you're like, I wish I got into Amazon at $1,000 per share, and now it's at $3,000 per share, you're probably gonna say the same thing in a couple of years when Amazon is, say, $5,000 per share, and you're like, I wish I got into Amazon at $3,000 per share. That's just how it works. And if you just look historically at good businesses and their stock prices, sure, they have periods of time where they decline, where they go sideways, where there's pretty much no returns in those stocks. But when the market has those stocks in favor, when investors are heavily buying into those stocks start rallying rapidly, and that's when a lot of FOMO starts coming into the market. So one piece of advice that I could give you here is that you shouldn't be listening to these trolls in the comment section or the media that says, oh, it's too late to buy into so-and-so stock. Because if you've done your due diligence and if you believe that this business is going to be bigger in the future, this business is going to be more relevant, this business is going to earn more money, it's going to have more revenues, more free cash flow, it's just going to be a better business in the future, then it makes sense to consider buying into that if the current market cap is still cheaper than what you expect it to be in the future. Guys, quickly here, just drop a like if you're enjoying this video. I want to talk about a couple more things, but your like helps out tremendously on here, and I appreciate that. So there's really 3 things I want you to take out of this video here, okay? The first is no one can time the market. Absolutely no one. Not me, not other YouTubers, not you, not Warren Buffett, no one. No one can time the market, and that's just the reality of it. And because of this, it's impossible to predict if it's better to invest now or invest later. There's really no point in waiting to invest if you find a company that has strong fundamentals and is undervalued. That is really the way I invest in the stock market. I look for individual stocks, individual businesses that are strong foundational businesses, but for some reason or the other, the market just doesn't like it right now and the stock price is severely suppressed. I've bought into plenty of stocks in the past when they were out of favor, and those are typically the ones that do really well for me. So some of them off the top of my head, probably Facebook. This one, Cambridge Analytica, that was a buying opportunity. Hindsight, that was probably one of the best buying opportunities in Facebook. And then you have stocks like Nvidia, the whole data center scare. Oh, they're not going to be able to sell their chips as much anymore, and data centers may not be as big as they thought they were going to be. Well, in hindsight, that clearly was false. Nvidia is doing perfectly fine right now, so that was a good buying opportunity. AbbVie, this is one I just talked about recently. There was a lot of fears when they were kind of doing their merger with Allergan. Who knows what's going to happen with the business? Their licenses are expiring for some of their products. What's going to happen with this company in the future? Those are just opportunities for me, because good brands and good businesses will just keep getting better. So hindsight, that was a great buying opportunity in AbbVie. And I can just keep going through the list of my stocks, and most of the time when I buy in, it's when they're out of favor. I will rarely buy into a stock when it's hyped, when everyone wants to get into it, because that's typically when valuation just gets so stretched that I just can't justify it, and I'm paying 5-10 years out for earnings, and it just doesn't make sense at that point. But the bottom line is, don't time the market. Just if you find good valuations in stocks that you're interested in, that's a good buying opportunity. And that kind of goes to my second point here, which is that time in the market will beat timing the market. It's impossible to predict when a stock is about to crash or when a stock bottoms from a crash. So what I like to do personally is just dollar cost averaging. If I find that I'm happy buying, let's see, Splunk. This is a good stock I've been buying recently, right? I'm happy buying Splunk at under $160 per share. So, you know, it goes to 160, I'll buy 150, I'll buy some more, 140, I'll buy some more, so on and so forth. And then when the stock eventually recovers and goes above 160 again, I'll sit back, I'll let the stock do its thing, because at that point, I can't justify the valuation as much, but I have a good position built and I'll just enjoy the gains going forward. I don't try to time when Splunk is gonna hit its bottom so I can go all in on the stock. I'll just dollar cost average in. Sure, my cost basis will end up being, you know, a little bit higher than what the bottom of the stock is, but if you just keep dollar cost averaging in good businesses, it tends to work out over the long term. And finally, the third thing I want you to remember is that regardless of what the market is doing, regardless of if we're in a global issue, regardless of if, you know, certain sectors are out of favor or the market is crashing or, you know, any external factor, good businesses will continue to outperform over the long term. Just remember that. A good company will keep producing profits, will keep producing cash flow, will keep producing returns to investors, and as a result, their stock price will reflect that sooner or later. Over the short term, in a market crash, everything comes down. It doesn't matter if it's the best of the best business. It doesn't matter if they have no debt on there, tons of cash. It just doesn't matter. And that's because there's a lot more mechanics behind it. You know, ETF sellout, those stocks are part of ETFs, and there's automatic selling pressure in there. So those are opportunities as individual investors we got to take advantage of and just, you know, ride it out, give it time, and over time, good companies will reward you. So should you be investing now or waiting for the next market crash? I think it's pretty clear that my answer is you should be investing as soon as you can in great companies if the valuation makes sense. We saw a crash in 2020. We saw a pretty good correction here so far in 2021. So the likeliness of us seeing another big crash, another big correction here in 2021, 2022 even, is fairly low in my opinion. So if you're gonna be waiting for a bigger crash here, you may be waiting for a very long time. That's all I have to say about that. Anyways guys, hope you enjoyed this quick video. I hope this puts your mind at ease and helps you kind of put things into perspective here, you know. Don't get caught up with the day-to-day movements of, you know, the market is down massively, stocks are selling off, no one wants to buy growth stocks, tech stocks anymore. Just stick to your convictions, stick to your research, stick to your due diligence, and that will pay off over time. Thank you so much for watching guys. Don't forget to invest positively and I'll see you in the next one.